As a trader, you've probably been in the position of seeing a great setup on the chart, and then for whatever reason you hesitate, you don't take that trade, it ends up working out and you leave money on the table. It can be very frustrating. Our guest is here to talk to us about that, about how to avoid it, Mike Toma. Mike, thanks for being here.
Hi, Tim.
All right, so we've all been there, where we don't take a trade, it ends up being a great trade, probably the best of our day, and we leave money on the table. It's almost worse than a losing trade. How do I avoid doing that?
Well, actually, this conversation may be pretty brief, but the answer is you take the trade. If your setup, it meets all the requirements and your setup's there, the rule is to take it. Now, if that's in your plan, you really want to execute those when those occur, because that's really what you wait for. If it's a valid setup in your plan, I mean, I define a valid setup in my plan as have had a historical edge consistently through different markets. So if that opportunity comes, I have to take it. It's not I want to or should I or shouldn't I. The decision-making process should be done before the market even opens. When those opportunities occur, I'm pushing the button.
It usually happens to me, of course, when I've had 3 trades in a row that I've lost on, and I'm hesitating to take that fourth. But inevitably, if I don't, that fourth is the one that wipes out the losses for those previous 3. So how do I take that fourth trade still with conviction if I've lost on those first 3?
Yeah, it's difficult, and I hear it all the time, and I'll do trade journal reviews and trade journal auditing, and I see it a lot. I see patterns where you'll have those 2 or 3 losers, and then you see maybe contract size go lower, or they just miss the trade, and it's intentional. They intentionally don't want to do it, and that's really where emotion comes in, and really what you want to develop, and easier said than done. It does take a lot of training and time, but you want to develop your business where you're at a point where to be a professional, you have to really go to a level where you're emotionless trading, and what that is just you become a project manager. You become a person who's just executing a project plan. What's my role? To execute a plan. It's not about setups. It's not about risk management in a sense. And I'm a big risk management guy. That's my specialty. But really, when that opening bell opens, my decisions are already made. Now I'm just focusing on execution, not worrying about profit and loss, and saying, this is my project plan. I am paid to perform a project. Nothing more, nothing less.
I think a lot of traders are looking for a certain level of certainty in the market before they take a trade, and you're never quite there. There's always that level of uncertainty that you're not sure it's going to work out. How do you get to the point where you're confident enough in the trade? Maybe not 100%, but enough that you're willing to take it.
Well, I use certain confluence measurements too. I need 2 or 3 or more things of confluence in the sense of I want to see 2 or 3 barometers that all match up at the same time at a certain price level. That gives me the confidence I need to allow the setup to work. And again, I think once a trader has a setup and they're tracking it, and I recommend they should always track in a trade journal, if you start seeing these same types of setups producing 60, 65, 68% results, the confidence really comes inherent in those numbers. So I know I'm going to be pushing that button. There may be exceptions, such as business rules, like I'm the 3 minutes before a news event, I'm not going to take the trade. That's a business rule that would prevent me from doing it. But other than that, you have to develop a sense where it's just like a GPS where it tells you to make a right. Chances are they're going to be right. Every once in a while, you may have a different route. But if you go with the instructions that you have in your plan, stick with the rules, stick with those percentages, they'll eventually come, even if there's a couple of losers in a row, and it'll get you to where you finally want to go.
I've heard of traders having actual checklists, just like a pilot has a pre-flight checklist. Everything has to be checked off before they take a trade. Is that something you'd recommend doing?
I recommend doing it, but actually I still want to recommend that you do that before the market opens. Once the market opens and those opportunities present themselves. Yeah, I mean, if you need a checklist to say, okay, is this confluence here, or is this, is there? But really, from a professional level, if you really want to get to that level of professionalism, it has to get to the point where you do this within a half a second in your head. You recognize it instantly, and you don't even hesitate. You execute.
Mike, thanks for being here.
Thank you, Tim.